Hey guys, how are you? Welcome back to my channel. This is Reading Addict. Guys, I have a very random topic and it just came into my mind and I thought we should talk about it. Why should we leave this topic to someone else to talk to? So this topic is mutual funds. You must have heard about mutual funds or you are investing in mutual funds. If this is the case, then it is your wish if you want to continue watching this video, but I want to inform you people, like, if you haven't heard about mutual funds, if you just have a slight idea about what mutual funds are, then we will talk about it and I will try to clear and put some light on mutual funds and how they are formed, and the basic structure, the basic outline, and how does it work. So mutual funds, guys, in simple terms, it is an indirect way to invest in stock markets, to invest in bond markets, or to invest in money markets and cash or cash equivalent sector. So I guess you have heard that when we invest in stocks, it is very risky. Suppose if I were to buy a share of ABC company, I would be in a very risky position because it is just one company, and suddenly, if it is my bad and share price went down, then I would be lost. So mutual funds is like a solid strategy if you want to play with the market, but at the same time, if you want to keep your position secure and safe, then this is the best bet to invest in mutual funds, because in that way, when you invest in mutual funds, you are indirectly investing in the stock market as well. So by definition, I don't know the exact definition, so mutual fund is something where you and some other small investors, we come together and we pool our money, and there is a fund manager who uses of who uses our money and invest as per the fund's mandate, as per the fund's objective. Every mutual fund, it has an investment objective, and every fund manager invest the mutual fund's money as per that mandate, as per that investment objective. He can't invest the money going beyond the investment objective, because that will be the violation of investment objective or the mandate of the fund. So in this way, guys, money are invested in stocks indirectly. So why should I choose mutual fund? So when I invest in mutual funds, I don't just invest in one company. There are chances that I am investing my money in different companies as per the funds, fund facts. So sometimes a fund invests in 20 companies, sometimes a fund invests in 100 companies. So more the companies are there, the more safety net is there. So that means, suppose if there are 50 companies that you are investing your money in and 10 companies fail, still there are 40 companies that will protect your money. So that is another advantage of mutual funds, because you don't lose all your money when market crashes. Some firms, some strong companies will always be there, that that absorb the market shock, that absorb the market fluctuations. Apart from that, mutual fund also has a fee component. It is called management expense ratio. Sometimes it is 2% or 3%. It seems very high, like 2% and 3%, and if you see the inflation rate, you think that, so the management expense ratio is very high. But I would suggest you that when you invest your money in the mutual funds for at least more than 2 years, then you can easily cover your management expense ratio, because if you are investing in income plus growth solutions, then you are earning at least 8 to 10%, which is covering your mutual fund fee as well. So that is another advantage as well. So when you choose mutual fund, always choose the time frame for at least 2 to 5 years. If you are investing in mutual funds below 1 year, chances are that you will lose your money, because mutual fund fluctuates a lot. If you see your mutual funds on a daily basis, how it fluctuates on a daily basis, then you might sell your mutual fund and invest in some fixed income securities, just to get the sense of relief that your money is safe and it is not moving. So when you invest, forget that you have invested for at least 2 to 3 years. So that's it, guys. There are many more things that we should talk about mutual funds. So there are a number of disclosures that financial institutions provide you. You have to read those disclosures. You have to understand the terms and conditions. So basically, let me tell you this fact as well. There are three types of mutual funds. First is savings. These are least risky. Then income oriented mutual funds, these are moderately risky. And then growth oriented mutual funds, these are very risky mutual funds. The funds that you should invest in depends on your risk capacity. If you are not sure about your risk capacity, then ask for some guidance or advice. Otherwise you might end up losing your money. First, you have to generate your investment profile, what kind of investors you are. After that, you should choose some funds which are suitable to you. If the funds are unsuitable to you, then I will not recommend you enter into mutual funds. Find a good advisor, approach them, ask them, request them to build your profile so that they can invest your money as per your capacity. So we can build your investor profile through so many different methods. One method is that, for example, if I say that if you have $1,000, if you lose $100, are you ready to lose $100 or gain $100 fluctuations with your funds? If you say that no, you are not ready for that, you can't take that much risk, you want your money to be secure, then you should invest in some different investment options. Your investment profile will help you to find the right fund, to find the right strategy for you. So guys, when you invest in mutual funds, be very careful about your investment profile and investment strategies. And I think that's all that I wanted to talk about mutual funds. I guess you guys are more intelligent than me. I guess you must have more idea about mutual funds. And if you are not investing, at least read about these options, because it will provide you more rate of interest in a longer time period than your regular fixed income securities.